Hello and welcome to the Shipper Update. I'm Anthony Smith, lead economist here at FreightWaves, and I'm joined with the one and only, the ever insightful Donnie Gilbert. And we're going to do a quick recap of what the weekly outlook is for the economic releases, expectations, and what I'm really excited about and what it's all going to mean for shippers and the freight market. So starting us off, Donnie, we have, of course, job openings. We're talking about that in the last Shipper Update. We're looking at how it's at 10.9 million. This is a historic high. And really, when you look at what's going on with the overall openings, we have more openings than we actually have available labor. And so this is really just a testament to how much overwhelming demand we're having within the entire economy, where producers, these manufacturers upstream, which we're going to get into in this next chart here, really is so ramped up to a level where we can't even hire for it on paper because there's not that many people here available to work these jobs. And so that's just telling us how much demand is in the economy right now.
So the answer is money. You hire, you have trouble hiring, you raise your rates.
Yeah.
But can these shippers, can these warehousing divisions that are already set by what they're renting or whatever else, can they afford to up their rates for labor and blow those budgets?
And that's the big thing is when money enters the equation, this is a little bit maybe of a controversial take, but we really need demand to subside. And that's really what's going to cool down a lot of what's going on within the freight market. Everything is so backlogged. There's not one magic answer. But if demand kind of ease for a little bit, they'll give us a chance to catch up with a lot of the backlogs that's happening right now. And so if there was a little bit of inflationary pressures that got to a level where people stopped buying and demand eased, that could help a little bit.
So the problem got so out of control that there's not really a good solution.
Yeah.
Or maybe the solution was 9 or 10 months ago, but it never happened.
Yeah.
So now there's no solution. And here, if you could maybe cut the shipping off coming from China, maybe we could get all the ports cleared out, get the system in, get those containers into warehouses or to the shelves, and then turn the water back on.
Yeah, exactly. I think that's a great point, great call out there. There needs to be a lot of changes within the infrastructure, efficiencies, and really the entire system. And these were all pre-existing issues before all this ramp up, before COVID, before all these aspects. And so really everything is just kind of exacerbated at this point. Of course, looking at job openings for transportation and warehousing in the blue line and manufacturing here in the orange line, and showing that both, and I said last time, I don't want this blue line here, transportation and warehousing, to be overshadowed by this orange line, because those are both significant markets. As we see more openings within transportation and warehousing, that's going to be, of course, all aspects of transportation, even office working and things like that. And then within manufacturing, it just kind of talks to the overwhelming demand. And I don't think this is going to be honest and true demand, but overwhelming demand.
It's like these numbers are jumping so high, it's almost getting counterproductive.
Yeah, exactly. And so in our next chart here, we're going to look at what's really kind of plaguing a lot of shippers out there, and that's going to be producer prices. And so the surprising thing, when we're looking at new orders, we're looking at production, we're looking at the backlog, all these things are persisting despite the rise in commodity prices for those producers. And so in times of economic growth and expansion, we see a lot of times that these producer prices get passed on to the consumer because they're in a better shape or a better position to take on these increased prices. These consumers have not batted an eyelash. These producers have not batted an eyelash. And so that's something surprising, because that's just showing us that there is overwhelming demand, not just upstream, but downstream as well, or not just downstream, but upstream as well. And so when we're seeing my expectations looking forward, of course, I should go back to job openings real quick. I think that's going to remain elevated. I think when we're looking at the producer price index, we're also going to see continued elevation here. I even had Jerome Powell, the head of the Federal Reserve, or Federal Chair, talk to the expectation of continued or persistent inflationary pressures throughout the remaining of the year going into 2022. And I think that is absolutely correct here.
So how is this producer price index, how is it derived?
So this is going to, I don't know if we have enough time to go into the exact derivation of it, but it's essentially the amount that producers are going to pay for these goods. And so if a producer is paying more for goods, that means that it's going to be more expensive for them to produce those goods. And if it's more expensive for them to produce those goods, and this is going to be a basket of goods. And so this is all commodities. So this gets broken down into construction, manufacturing, different segments, different subsegments. This is looking at the overall commodity, the overall market here. And so when we look at this level, this is going to be on a year-over-year basis. And so month-to-month to year-over-year, those are going to be different breakdowns to kind of look at it and kind of digest.
And we're seeing a 19%, 20% increase year over year.
levels that we have
prices.
not seen at this year-over-year level since, I think, 1974, if I'm correct. So that's going to be one to watch closely. And I think we have one more chart maybe of what I'm going to be looking at closely. Of course, retail sales and the screen line here. That's going to get updated, and that's going to be the culmination of all this demand here. And in the blue line, of course, we have our van outbound tender volume index. And as demand continues to stay high, as people continue to buy and those backlogs get filled, that's going to feed into freight volumes.
Keep the retail sales rolling. We're getting there.
Exactly. So, Donnie, thanks so much for joining us for this segment.